Hello, listeners, and welcome to the Cognitive Dissidence Podcast. As usual, I'm your host. I'm Jacob Shapiro. I'm the founder and chief strategist of Perch Perspectives and the director of geopolitical analysis at Cognitive Investments. Joining me on the podcast for the second time is Chase Taylor. Chase is macro strategist, i.e. the wizard behind the curtains at Pinecone Macro Research. Highly recommend you check out Chase's work at pineconemacro.com if this is the sort of stuff that interests you. Thanks, Chase, for coming on. We had a great conversation. We recorded this Friday, April 15th at about 2 p.m. in the afternoon Central Time here in New Orleans. So I think it'll be a week or two probably before this comes out. So if some crazy things happen between now and then, that's what's up. But I still think Chase has been incredibly prescient so far since I've known him and have followed some of his research. And well, let's hope he's not prescient about some of the things he talked about in this podcast, because some of them are fairly pessimistic, but others are good. So cheers, Chase. Thanks, listeners. As always, we appreciate you and welcome your feedback, comments, ratings, all that kind of good stuff. Share us with your friends if you think we're doing a good job. Take care, and we'll see you out there. Chase, thanks so much for being here. This will record after the Cavaliers-Hawks game, but listeners, you can't see him. I can see him right now. He's in his Cavaliers regalia. Welcome to the show. Nice to have you back.
Appreciate it, Jacob. It's great to be back, and actually headed to Cleveland tomorrow to catch a 40-degree high baseball game. So that's Cleveland for you in April.
They have a new name now, right?
The Guardians, yes.
Guardians. All right, yep. Cool. There we go. My Atlanta Braves, I guess, are at some point going to get with the program too, but let's not go into that. Let's go into, I honestly don't even know where to start. There is so much stuff going on. I based on some of the stuff you've been writing lately, I wonder if the wage price spiral is the thing at the top of your mind, or maybe the thing that we should start with, because I mean everybody's talking about inflation, and I thought your take on it was extremely well differentiated. So why don't we start there, and why don't you tell our listeners why wages are keeping you up at night?
Yeah, so I think really at the end of the day, my conclusion is that they aren't keeping me up at night, because I don't think it's going to be a problem the way some people do. It's kind of funny. Like almost everything in macro right now, the war kind of interrupted everything you thought you knew, and you kind of had to like reevaluate some stuff, which for me included obviously inflation. I kind of did a deep dive on wages, because I felt like the only way inflation was going to stick around in a really ugly fashion was if we had a wage price spiral where wages just would not stop going higher, and that enabled prices to keep moving. I really don't think that's going to happen. I think wages still can kind of roll over, and I would call it the second half of this year, and especially if growth is going to slow down markedly the rest of the year. If you look at how many people, and I wrote that piece a couple months ago now, but if you looked at just how many people were out of the labor force due to either COVID directly or kind of indirectly by kind of parsing through the data, it just became clear there were just millions of people that could still come back into the workforce. And then obviously, you have a lot of people that thought they retired, maybe, that all of a sudden gas prices and food prices and how much it costs them to buy a car, like maybe some folks in their 60s or something kind of realizing, I better get back to work. And the data is showing that the older cohort is going back to work. So I think the supply of labor is going to be a problem in the future, but for the next year or two, just isn't.
Yeah. Am I right in thinking that, it's great to be Gen Z. It seems like they're getting all the benefits of this. And maybe this is just my bitter, geriatric millennial self talking, because I remember when I had to work for $200 a month as an intern, post 2008 financial crisis. But it seems like Gen Z is good, and there's going to be a lot of opportunity for them in terms of jobs. And it's almost like they're going to get their own little boom period there. Am I taking it too far?
Yeah, no, I think that's fair. I think now that DC realizes they have the fiscal lever, and obviously it works really well, too well at the moment, but it kind of is a realization that anytime you want to get full employment and get the economy moving, you just kind of pull that fiscal lever and it'll work. So I think they will probably have a tighter labor market than we experienced, especially for the last decade of secular stagnation, that they're just not going to have to deal with that. They'll have small bouts, to be problems, but anytime you have that happen, they're probably just going to have a a fiscal and monetary response to kind of help back them up. And if you look at the data, like the youngest people and the lowest educated people and the lowest earning are the ones getting just incredible wage gains. The youngest cohort, like it's over 10% a year right now. So it's so easy to look at wages and go, yeah, but they're negative on a real basis. And obviously they are for a lot of people, for most people, but some of these, younger groups, they're not. Like they're actually beating inflation, even with inflation being over 8%.
Yeah, I wonder how that's going to play out. I mean, I think it's good, and I think you pointed this out. It's good from an inequality perspective that some of these lower wage workers are finally catching up, because they never did after the '08 financial crisis. After the '08 financial crisis, like the upper classes rebounded fairly swiftly, but the lower classes never really did. But there's something different here about class versus younger workers, because if it is just going to go to the younger workers, then you're going to get this weird dumbbell type thing where like the boomers are great, they're retiring and all their great investments and all the things they got, and then the young guys are feeling good about themselves, but everybody who was kind of in the middle is in this in-between phase where you never really got to take off. And I wonder psychologically what that does to the market. Maybe I'm blinders because I'm in that middle thing and it feels slightly unfair, but I don't know. I went away thinking about that from what you wrote.
Yeah, and it's funny you mentioned that, because like after writing it, I had never really stopped to think about it. And I'm a millennial that has had a rough time throughout this situation. Although working for the government, it's a little bit different. But even there, like most years, you're getting even the government was given like here's your 1%, maybe if you're lucky a 2% raise. And it's not like rents were going down along that time or anything. So. Yeah, it's something worth thinking about, especially from the political standpoint, where you could end up in a situation where the youngest and the oldest kind of see eye to eye in a way, because everything's going well for them, but then you have some people in the middle that are still struggling, and clearly like the erosion of the middle class has already been a significant theme, but maybe it's sort of the erosion of the middle class, as defined by age instead of income, can become its own, like awkward, like voting block.
Well, yeah, and I was doubly fascinated because you had a great excerpt from a piece that Adam Tooze wrote about kind of the wage price spiral in general, and he called out something that I've been thinking about a lot, because the only times that wealth inequality in the U.S. had been at these levels before COVID was sort of pre-progressive revolution, like early 1900s. Great Depression sort of periods, and then the 1970s. And you really had political revolutions in the United States. They weren't, some violent things happened actually in the 1930s and even before then. But,
sure,
relative to most countries, they weren't violent. And I don't know, I always thought that was going to flip. But in some ways, the path that you charted forward to me and the way you checked sort of the conventional wisdom about 1970s inflation hanging over our heads, it made me walk away a little bit more bullish about the situation in the United States than before. But then I also don't understand how, like at the same time that maybe that's happening, you've got all this political polarization and the country is even more divided than ever. So do you think that maybe that starts to resolve if your thesis is right, or are these sort of two separate paths and polarization has nothing to do with the inequality issues? I know that's a big question.
Yeah, that's a really good one though. So I find this really interesting, and I don't think I have like a great grasp of it or like a really good answer. But I think what we all do is just assume that inequality is essentially what drives this polarization, and I think we all kind of blindly just assume that. And I know I have, and I've always kind of looked at it as, okay, well, if we just kind of fix that, just pull the lever there and fix that inequality problem, like everyone will just chill out and everyone will like each other again, and we don't have to vote for crazy people. It'll be great. But I mean, if you look at how bad the divisions are between like urban and rural, like maybe if you just give urban and rural people all a great raise, they still don't understand each other, still don't like each other, and they still vote for their own version of crazy to try to stop each other. So I hope that is like a magic fix, and I hope we continue to kind of close that gap. I think it's very possible to close that gap, but I do worry that maybe it's not the magic kind of formula to get rid of the polarization. And obviously, the role that social media plays, and the internet plays, all these kind of like amplifying network effects and everything, like that makes it scary. It makes you wonder, like, again, like if you just give people money, like if it just makes everything go away, maybe it won't. And I think in the past it kind of did. Like if as long as everyone had a decent job and they could take care of their family, like politically they're fine. Maybe identity politics being so extreme now, like people want to win, ideologically. They don't just want to have a few extra bucks and be able to pay their bills.
Yeah, and it's funny. I've always been somewhat dismissive of social media as a sort of negative force. I just saw it as, this is another way that human beings communicate. We've come up with new ways to communicate all the time. Why is it that different? But I do think there's something to this idea that folks are being siloed in their own communities and only listening to the things that they agree with. Because like and this is the ironic thing about things like the internet or even television, it was supposed to be this amazing, democratizing, connective phenomenon. And it was for a while. It seemed like for a while, for the first time, we were all experiencing the same things at the same time, and we could talk about them and like engage with them like never before. And the thing that I'm really struck by is that now everybody has their own, and I also think that it's hard to think about how markets are reacting too with this, because it seems like everybody has their own little narrative and their own little place where they go to for information. And even though the same things are happening in the world, they're being interpreted completely differently. And we have no relationship to each other anymore. That's just in the United States itself. It's even more true globally, where arguably it's been even worse. And I don't know. I wonder if that has something to do with the way that markets have been, I don't know, kind of diverging all over the place.
Yeah, it's definitely an interesting thought. I at the end of the day, and I know what you mean. Like I do think social media gets like this really extreme reputation, and obviously I can't remember the name of it. That Netflix documentary was kind of like fan the flames of that. But at the end of the day, like I think most people have experienced it on enough of a level where you realize it's happening. Where maybe you have someone in your family that was, let's just call them normal, and then they got into some Facebook group and they started like you just binge reading stuff from there, and the next thing you knew, like this person that you knew was like really well adjusted, like normal person, is just like extreme in their political views and saying things that are just obviously not true or kind of like unhinged, and that's could easily be from either side of the political spectrum. So I do think it is real. I've experienced it myself. Like I remember like when I was in college, I was a bit of a political like firebrand activist type, and I was just the king of only like consuming the things that I agreed with, or finding weak arguments to poke holes through or something at most. Really, I credit markets to kind of reforming me, because markets, those take all your money if that's the way you roll. So, so like, I mean, I've seen it myself. I haven't been on Facebook in many years, but whenever I was on there, like I could see it going that way. But for whatever reason, I always notice it more with like older people, like as you say, aunts and uncles that like millennials may have. So things like that where that echo chamber gets like really extreme.
Yeah, I don't know. But we're getting philosophical. Let me ask a little more tactically. One of my favorite things from this piece you wrote, I actually typed it out because I wanted to make sure to say it. You wrote about yourself. Previously you had predicted inflation when everybody else wasn't, and you said you're still an inflationist and you do think we've started a secular shift. But in Qs 2, 3, 4 of 2022, we're likely to show significantly fading inflation exactly at the point that the financial world decides it's a good idea to extrapolate the current high inflation trend. And fading dumb extrapolations is how you make money in markets. I thought that was a great line. I think it's a very prescient insight. Although I will say, it feels like everybody who knows anything thinks the Fed is making a big mistake and is going to have to reverse course. But then you would think that everybody knows that the Fed knows that it's making a big mistake and is going to have to reverse course. So I wanted to ask you to kind of unpack what you're thinking about inflation a little bit more, and then to talk a little bit, just give us a taste tactically of what are some ways to play those dumb extrapolations.
Yeah. So, and that is like a perfect example of like the war kind of messing with the thinking a little bit, at least. So I was long Eurodollar futures, which is just a way to bet on less rate hikes than expected, essentially, because I didn't think this is like when we were like, oh, we're going to probably hike 6-7 times in this year, and I was like, okay, that's too much. That's crazy, because inflation is going to fade in the second half, especially. Now, granted, so as soon as the invasion happened, all that spiked because everyone thought, like, okay, well, rates are going to go down, and people were jumping in treasuries because of fear. I just used that opportunity just to completely get out, and I actually stayed out of that trade until it was either last week or the week before I started to get back in, because yes, like obviously energy and food inflation are probably going to be significantly stickier than they would have been, but also like that energy and food inflation is going to slow growth, which is in a sense kind of self-regulating. So I do still think inflation can, I'll say, move lower especially in the second half of the year, more so than people expect, and especially than I think the Fed currently expects. If you look back, if you just go back 1 year and look at all the prominent, famous, let's call them economists, including the people at the Fed and what they were projecting for inflation, or go back 1 year, 2 years, 18 months, however you want to. I mean, none of them saw this coming. Like this outside of a couple folks, like no one really saw this coming, especially the Fed. To me, it was painfully obviously coming. But like I wrote in the piece, like now everyone's just extrapolating. Oh, like, well, it's here forever. Like, but that's not how these things work. I mean, if you look at, okay, well, why did we have the inflation? Most of those reasons are kind of fading away, I think. Obviously, that giant fiscal impulse is over. All the money that folks got and saved up during that time is over. Now people are putting money, or putting purchases back on the credit card. They're probably not going to want to keep doing that too much. Food and energy and rent is taking a significant chunk of people's paycheck now. And hey, real earnings are negative for most people, like I mentioned earlier. All these things are terrible for growth. So I think growth and inflation both can fade significantly for the rest of the year. And when it comes to like, well, like, what do we do about that? To me, it's simple, and it's mostly kind of the fixed income game. At this point, short end rates are just exploding higher, and I think this is a Fed policy mistake, and they're going to have to kind of backtrack. And it wasn't really only a few months ago I was saying like, hey, like no one thinks they can pull off, a soft landing, but I do, and now I just don't, because that was when they were saying kind of like 6 rate hikes, no 50 basis point hikes, and since then, we've got that number up to like 9, and now it looks like we might do a 50 basis point hike once or twice, or maybe even more. They're going to go from QE to QT essentially like overnight, and they've already promised that the quantitative tightening would be a lot more aggressive than it was last time. So, I mean, we are hitting the brakes. So the way I see it is we hit the accelerator during the kind of post-COVID like stimulus era. We hit the accelerator way harder than policymakers realized, or economists. And now I think we're hitting the brakes way harder than anyone realizes. So that's why I think you get this reversal in growth and inflation that, again, is going to catch everyone off guard. And one thing I'll add to, it's something I said on Twitter, I don't know, a year and a half ago, was there's going to be a lot of wage pressures, despite the fact that the unemployment rate is not that good. And that's going to like really surprise people. And that happened. Now like unemployment rate's pretty tight, which I actually was able to get a lucky guess and say we'd get under 3% by the end of the year, and we did at 2.9. But now I think you kind of have the opposite problem, where if we have really good, kind of jobs numbers, people are like, ooh, that's really inflationary because labor's getting tight. But the reality is that just means a bunch of people are coming back in the labor market. So if we see that's a great sign that the jobs are going to be, more and more people coming back in the labor market. It's going to ease inflation because it's going to ease wage gains. Although I think we're going to get to a point where labor even has problems because the economy is so weak, which that's going to make it really interesting for the Fed if, say inflation is still 5-6% and all of a sudden there's a lot of layoffs. Like what do they do?
Yeah, they're going to have to.
And right now, when you have the most dovish people on the Fed as full-blown hawks quoting like the most hawkish people in history, like it's pretty clear like there is no doves left. So it's going to take a while to turn that super tanker around whenever they have to go back to being dovish.
Yeah, there's no perspective. I can't say that there's no perspective left, because it feels like there's no perspective from them ever, or at least no long-term perspective. But speaking of stuff that changed as a result of the war, let's talk about corn, which you were writing about October 2021. I've been banging on the table about food prices too.
Yep.
Is that your most successful recommendation ever? And do you think that it was because you got it right, or just because Russia decided to take a bunch of basically a big bazooka to global grain markets?
Yeah, so it's definitely not it's not the best call I've made. I think getting coal and natural gas right over the last couple years was definitely more profitable, but corn has worked out great. I still think it can actually go a good bit higher, but I think as part of it was just being right, but most of it, if I'm being honest, like I think is really the war, and weather both. I mean, what weather hasn't cooperated for corn. You have it's very dry in the Corn Belt in the U.S. It's very dry in Brazil and Argentina, so that's a problem. And then the possibility of pulling Ukrainian corn off the market, and really for me, like my thesis came down mostly to just one thing. I think natural gas is going to be really expensive, and I think that's going to make fertilizer really expensive, and that's going to make corn really expensive. Like super simple thesis. Now, with that said, I did know, at the time of creating that thesis, like, hey, like I kind of have a right tail here. Like if Russia really does invade, which I thought decent chance, then obviously natural gas in Europe is going to go through the roof, and they're gonna have to limit how much fertilizer they're making, things like that, and that would bring up fertilizer prices globally. That was obvious, but it's not like I was making the trade based on that by any means. Like, so all the money that has come into corn based simply on the invasion, like that, I can't take any credit for that. That's for sure.
Yeah, it's an interesting one too, because I'm sure you saw that now with the Chinese COVID lockdowns, they're worried that the Chinese are not going to be able to plant corn, or that corn plantings are going to be disrupted in China. And China's been acting weird in general. I mean, kind of bidding up some of these agricultural commodities, which is not normal behavior for them to bid things up like that. And you also, like corn plantings in the United States are down, but they're down 4 to 5%. And soybeans are only up a little bit, kind of incrementally. We had Neil Townsend was on this podcast a couple episodes ago, and he said that, the most important thing from his perspective right now globally in terms of global food markets is what is the corn yield going to be in the United States for this upcoming season. And if it's anything short of last year's record, like kind of global grain markets are in trouble. So all that stuff already scared me. And then Biden's talking about ethanol, and I don't know, I wanted to douse myself in ethanol and light myself on fire. I don't get it. Like, why are we still doing the ethanol thing all these years later? I mean,
that's a tough trade-off. Like, do you want cheap energy or cheap food? And yeah, but I didn't get it either. Granted, like it is small. Like it's like 1% of gas stations can even actually hold that stuff. So like, I don't think it's gonna be a big deal, but it is still awkward. I guess maybe it comes down to voters really care about gas prices, and he just needs to be seen as doing something.
Yeah. And I was also just saying that to your point, though, about, if China does have disruptions, or if the corn yield in the United States isn't quite what it should be, or if South America continues to be mired in drought, it does feel like there's more legs here to go. It doesn't feel like corn is done kind of on its upward path. Do you feel that way, or are you starting to put the brakes on?
So I took a third of my trade off, and I'm long December futures. So basically, to capture this year's entire crop, it was the idea, and a third off for no other reason than, like, whenever I was writing about fertilizer, no one cared, and now, like, I think everyone on my timeline is a fertilizer expert. It's being written about so much. Like the food angle of the war has been, I won't say just well covered. It's been too well covered. Like, people are going back to the extrapolations and like making small numbers too big. People have kind of blown some of it out of proportion, as if there's no storage of any of these grains in the world, as if no one else produces them. Like, it's kind of like a little bit of a overreaction in some ways. Obviously, like, it's worth overreacting to, because it's so important, which is why you've been covering it for a long time. You've been doing a great job with that. But at the same time, I do think some of it's an overreaction. So part of me just wanted to take some profits, just like, I'm such a sentiment driven person. Whenever I see everyone agree on something, it really worries me if I'm in that trade. And on the flip side, if I see everyone agree on something and I look into it and maybe everyone's wrong, that's kind of where I source my trades. So that worried me a little bit, but just still looking at the fundamentals. Now, what the government is showing is they do think that corn there'll be more corn planted this year than soybeans for only the third time in history. So I guess that that is significant, but
more soybeans than corn, you mean?
No, the opposite. It's almost always more soybeans than corn planted. So this year would be only the third time for more corn than beans.
I see.
83, and it was one other that weird year where I was like Jimmy Carter, somebody like sold a bunch to somebody. I can't remember what that was, but it was strange. But it's not by like a lot. And if you look at the predictions for acres planted and for yields, to me, still both are just way too high. I think. Especially yields, like you pull out a decent amount of fertilizer and yields are going to have a problem globally, especially like. So I still think some of those predictions are a little aggressive, and the futures market and the ags they paid a lot of attention to those WASDE reports and they move markets. So if I'm right that they're still kind of overestimating those yields, then price can still move a lot higher. And obviously we always have the kind of right tail of weather if they're not able to have a successful like planting season, or there's weather issues with the harvest, or we have another like freak wind event that takes out a bunch of corn like we had last year, the year before. Like you just never know with that. So there's always that possibility that weather kind of creates its own problems.
Yeah, it really resonated with me what you said about how everybody's a food expert or a fertilizer expert, and I'm sort of with you on people overreacting a bit too much, because I mean I started writing about this literally the week after the pandemic. Like you could see that food supply chains weren't doing very well, and that this was going to be a bad time, and that we were kind of already on that 08, 09 trajectory. But it's gotten so bad that even I'm starting to pump the brakes, because I mean this is really in some ways a logistics story. Like yes, there's on paper there might be wheat here or corn here, but it's about how do you get it from point A to point B, and can all these other things work together, and are there substitutes? And right now where we are, there's a couple countries that are screwed. Like Tunisia is screwed. I have no idea what Tunisia is going to do. I love Tunisia. It's one of my favorite countries. I'm really pessimistic about that. These protests in Peru, some of what we're seeing in Pakistan, like the parts of the market that are really dependent, you're starting to see it. The thing that makes me nervous is that, and I won't name names, but there are a lot of experts out there calling for great famines and the whole civilization is going to collapse, all this nonsense. And like, you're right that we are a couple freak storms and maybe a prolonged drought and this, that, or the other thing away from that, but we're not there quite yet. We're kind of on this knife's edge where like, yes, things are bad, and it makes people like me nervous because one, like put another couple bad things in the hopper and they can get bad. And then this is, I mean, Philip Tetlock writes about this all the time. The folks who are out there prognosticating doom are the ones who get covered and are the ones who people listen to. And it's just this endless feedback loop. This is only tangentially related, but it's something I've been working on for a while and haven't quite gotten the confidence to pull the trigger on it. But I wondered if you had a view on cotton, kind of mildly related to corn in the sense, major U.S. agricultural commodity prices there are really, really high. And some of that is due to the way cotton futures work. There's kind of a weird infrastructural problem to that. But do you have any thoughts on cotton? Have you been looking at it at all?
So I sadly have not traded it much this year, but last year I was long cotton for a good chunk of the year. It was, and honestly, just to be super transparent, it was mostly because I just loved the chart. I mean, it was just beaten down so badly for a long time, and it was kind of like it was making an obvious technical breakout. So I went and did a little bit of homework on it, but not a lot, and a lot of it really comes down to weather in Texas. And whenever you get a lot of, and where I'm from, and I grew up on the Gulf Coast in Texas, and we actually grew a lot of cotton there, and yeah, it makes a big difference when you don't get enough rain down there. So that part kind of worries me that maybe Texas actually finally gets some rain in the summer, and then it's not as bad as it's kind of getting priced in at this point, because I mean it's just gone straight up for the last couple of years now. But outside of that, I haven't done a good enough deep dive into cotton in the last year and a half to have a really firm opinion. I just don't know where supply and demand is well enough at the moment.
Yeah, well, if you get any free time, funny joke, take a look at cotton and tell me if my spidey sense about maybe going short is crazy or maybe whether I'm onto something. Let's move on to sort of the big one, which is energy. You're the guy on energy as far as I'm concerned. You've been kind of right every step along the way from my perspective. So Russia-Ukraine war happened. We threw out all the old assumptions. What do you think is going to happen going forward the next 6 to 12 months? Is this oil 200 a barrel and OPEC can't possibly meet demand? Or do you think that is overwrought? Kind of where are you for the big three hydrocarbons?
Yeah, so I think oil really is still just kind of like as bad as it has been at any point. And my bullish thesis going back really a couple of years has been like kind of like the point where this thing kind of gets unhinged is when everyone realizes that OPEC they don't have enough to make this problem go away. And I still think that's true. And the interesting thing is they kind of maintain that they have, X million barrels of capacity left. But if you look at a lot of the quotes that have come out from their oil ministers, like they've made it very clear, I would say for at least 6 months, hey, like this is a problem. Like we need the rest of the world to invest. I feel like they tried to say it without saying like, hey, we're pretty much tapped out. But then you go look at the numbers, they're supposed to be increasing 400,000 barrels, every month, and they haven't even come close to that. So it kind of makes it obvious that the spare capacity at this point is largely a myth. I think that was fairly simple to figure out, a year ago. Now, if you go look at just like Saudi Arabia rigs that are out there, like they're super low. Like they just haven't tried that hard yet. So yes, they can do this, but there's a lead time that you have to factor in. So can they significantly bump up production for 2 years from now, or maybe even for a year from now? Sure. Are they going to be producing a bunch more in 3 to 6 months? No. And if the war drags on and Europe gets around to some sort of even half serious oil import ban from Russia, that creates, let's say, 3 million barrels of shut-in production from Russia instead of the kind of one-ish at the moment. Like that is so significant. Now, at the same time, we had this crazy like durable goods binge in the U.S. after the fiscal stimulus, and obviously that created a just monumental amount of demand for diesel. That's going to fade because the economy is going to slow down, and especially for durable goods, because at this point I would hope everyone bought everything they needed, and most of it already got here. So I do think demand can wane a little bit, especially in the U.S. and in the West in general. Just fully on the economy slowing, and the global economy is going to slow because again, food and energy prices, the dollar being really high, like there's just a lot of headwinds for the global economy. So that can slow demand down a little bit. But even if you go back and look at 2008, like oil demand fell by like, I don't know, 2% or something. Like it takes a lot to really knock over oil demand. So I don't think we can count on that being a significant help. We really need, new higher production, and it's just kind of at the moment unclear where that's going to come from. Obviously, it's going to be fading in Russia. OPEC has some, but again, that's kind of far out. And past that, shales. Shale in the U.S. is making a very methodical comeback. But even if they push all the way back up, let's say they find all of the equipment they need and all the workers they need, and they decide, our investors are just going to have to deal with the fact that we're going to put a bunch of money in the ground again. Even if that happens and they're able to get it back up to like 13, and we bring back some Venezuelan and Iranian, like I still don't think it's enough. So I think we are in a kind of a structural undersupply market, and that's probably going to be the case, at least I would think for 3 years. But that doesn't mean we can't have like a recession-induced significant pullback in oil in the next 2-3 years. Like that's possible, but that doesn't mean that the supply and demand kind of structural dynamics got better. It just means financially it got cheaper, because that can happen. I think a lot of kind of oil nerds lose sight of that fact, or even make fun of the fact that like, oh, macro doesn't touch oil. Like, well, of course it does. As far as natural gas, though, I'm a lot more optimistic that we're getting closer. I think obviously the price spikes in Europe and the fear of not having Russian imports this has created a lot of investment. You see, actual governments talking about it. You see, permitting being loosened up throughout Europe, and Europe doesn't have a ton of natural gas to begin with, but they do have some. Like, you look at the UK, like the UK, obviously Norway, like there is some there, and they're
Dutch.
they're getting a lot more aggressive, and they're pumping up production at the moment. But more importantly, they're raising investment. And in the U.S., with $5, $6, $7 gas, like that, I mean, there's a lot of gas in the U.S., so they will go and get it. Really the kind of the governor on the market is just LNG export capacity. You can't just wave a magic wand. Like, those are multi-billion-dollar, multi-year projects. So that is kind of what limits the market from really coming back down in price short term. But I think natural gas is actually relatively close to being at fair value. I don't think it's like, for the last 2 years, to me it was just super clearly wildly undervalued. And now I think it's coming to the point where, like, okay, the price actually starting to make sense to me. I actually got rid of, for the first time in 2 years, over 2 years, I have no natural gas futures left. I still have plenty of equities, but I no futures. Like, it was actually this week, I was like, all right, well, that's good enough for me. I'm done.
That's fascinating. So on the oil point, I wanted to ask, one of the surprising things to me has been, I mean, it almost feels like the shale producers in the U.S. don't believe it. Like, they're not going to actually start going for it until they see, that for 2 or 3 years prices are going to be elevated. And they still are behaving like people to me who think that the bottom is going to drop out of this in 6 to 12 months. Do you think that's fair, or do you think that? And you sort of wrote about how the release from the U.S. Strategic Reserve might actually cause them, in a weird way, to be more optimistic about the future. Talk through that point, because I thought that was a really well said point.
Yeah, so I kind of agree. I think a lot of it is just investors putting the pressure on them, because all they did was light money on fire for a decade. So, and they really owed their investors, at least a period of time where they stopped putting money in the ground and put it in people's pocket. But now, like, that's what's happening. The cash flow is just unbelievable in the oil sector. So they're going to have more than they know what to do with all over the world, but especially in the U.S. and Canada, and double especially in Canada. But yeah, going back to the Strategic Reserve release. So one of the reasons I don't think we've had that investment lately is, if you go out on the futures curve, everyone's like, oh, sure, like, oil's tight now, but again, that going back to, like, everyone just believed OPEC was going to save us. So if you go out, a year, 2, 3, 4, 5 years on the futures curve, and oil gets radically cheap again. If you think about it, if you're about to go put $1 billion in the ground to try and get more oil, it's not necessarily so that you can sell it in 3 months. It's more like, like, hey, we're going to be selling this, a year from now at best, probably many years from now. So you would kind of like to get some signal from the market that they think oil is going to be expensive in the future and not just today. And that had not happened, and really kind of still hasn't. But the major SPR release did really flatten that futures curve, that term structure, to bring the price up in those out years a good bit. Like, the front end got whacked on that news, and then the out years were actually going up. So that's the kind of thing where, if you're making an investment decision as a CEO of an oil company, you can kind of look out at maybe the end of next year, and the price actually makes sense, and you can make money there. And for one thing, you can hedge by using that contract, but also just as like a pure signal standpoint, it gives you a little bit better a feeling about where you're headed. And I wrote in that piece, like, I don't necessarily think the White House knew that when they did it, or that smart to think like, oh, here's what we're going to do to the futures curve. I think it's just really like, hey, we just got to do anything to get this gas price down. But I think they may have accidentally done something that's going to help the oil market, which is a good thing.
It's remarkable to me that people actually blame the White House for gas prices.
Yeah.
Like, there are many things I blame the White House for, and that I get mad about our government for. But, like, high gas prices, I struggle to get in the mindset of someone who blames the White House for that. But I also wanted to ask, and this is one of those scenarios where most of the people I'm talking to agree with you right now. I agree with you. Is there a bear case for oil the next 6 to 12 months that we're not thinking about? I have not been able to think of one. I wonder if you've been able to think of one.
To me, the only one would be like a significant demand destruction event. So it would have to be sort of like an exogenous shock. So something that brought, a third of Chinese demand offline and it stayed that way for 6 months, or, it'd have to be something that you can't really foresee, and something significant that hit demand, because the supply side is not that difficult to kind of model out just by looking at, capital expenditures and things like that. And that really doesn't appear to be the answer anytime soon.
Are the COVID-19 lockdowns in China enough for you to mull that over, or not big enough?
So I think short term, sure, but is that going to be a sustainable long term problem? I just doubt it. And if you look at Chinese imports, like they have fallen off a good bit. So like I do think that is significant, but again, it's kind of significant short term. I just assume at some point they quit on COVID zero, or it quits on them. So I doubt it.
She is not talking like somebody who's going to give up, but we will see.
No, it's been pretty stunning.
Yeah, no, I in some ways I respect leaders who go down with the ship like that. I felt the same way about Hosni Mubarak in 2011 when it was the Arab Spring and everybody said he was going to leave and like he was supposed to give his concession speech. And I was telling I was at Stratfor at the time. I remember we were all waiting for the speech and I was like, guys, he's not. And I was like this young analyst nobody took seriously. Like, there's no way he's going to resign. And everybody's like, no, he's going to resign. And then he goes on stage and he's like, I'm the father of the Egyptian people. I'm not leaving this office. And then it like cuts out. Anyway, I like it when leaders double down and stick to their guns like that.
Definitely doing that.
Before we leave energy, coal prices, any insights there? Because I mean, the one thing I don't think the Europeans are going to go after natural gas or oil with Russia at all in the next 12 months. I'm pretty confident in that take. But the coal ban, and it only kicks in August, but now we're talking about something that's fairly significant, and that's a fairly tight market. And if you think folks haven't been investing in oil, I mean, let's talk about coal for a second, which still powers much of Asia. So do you have any thoughts there?
Yeah, I mean, I'm still bullish. Like I have taken some profits just because, I mean, most of the stocks I bought, have gone up many times over at this point. But for one thing, I mean, it's just the natural relief valve for when gas prices go up. So that just is like almost embedded. And yeah, like the production and how tight it is just kind of unbelievable. Like I don't know where we're going to get coal from. If you look just in the U.S., I mean, just the U.S. producers, they're basically all sold out all their supply for like 2-3 years. So like you can call them, but they're just going to be like, yeah, sorry. And obviously U.S. exports have popped and they're at multi-year highs, and production, it just really struggles because there's no investment. No one wants to put money in it. Everyone views it as like a terminal bet. Like, okay, this is going to end in like 4 years. So how do I value your cash flows for that? And we still haven't had the recognition that that's not true and that we have to have this stuff, so that you better give them money. And when it comes to all the fossil fuels, I think really that's kind of what it comes down to, is the lack of investment. And I don't just mean like the company doesn't take some cash flow and reinvest it, or that governments don't help. What I mostly mean is the trillions of dollars of money that's being managed globally, whether that be your neighborhood financial advisor or it's major pensions and sovereign wealth funds and endowments. Like most of that money does not touch fossil fuels anymore, and that's most of the money. So more than half of the world's assets under management won't do it. And when that happens, you get really cheap stocks, and they're structurally cheap because they don't get any flows. Whereas you look at like the S&P 500, it just gets more and more flows all the time. So it's kind of difficult for it to go down. But then you end up with like this price signal where, say again, you're the CEO of pick a fossil fuel in their company, and you look at your stock price and you go, I have no reason to invest money, none. So they don't. And I think that the signaling from very cheap equity is part of the problem. Like they're not going to invest because no one invests in them. And it's really difficult for me to see that changing in coal. One of the things I kind of looked for this year and last year was some significant changes in attitudes towards fossil fuels. And you've seen it a little bit, but not much. And especially for coal, and hey, rightfully so from the environmental standpoint. I guess we've seen a bit of a move in uranium and nuclear in general. This past week we saw Europe's made a little bit of a move. The U.S. kind of, but not really, and then South Korea this week. So that has actually happened, but you still haven't seen anyone really embrace oil and natural gas. Well, natural gas a little bit in Europe, I guess, but globally, especially from the investment standpoint, like seeing a massive like endowment or pension or something, what, we were wrong. We're going to get back in fossil fuels. This was dumb. Like that would be a really big signal to me. And that's the kind of stuff I thought would happen by now, especially after the invasion. And maybe it's happened and I haven't seen it, but I have not seen it.
No, I don't think it's happening. I mean, it's weird. It's all kind of virtue signaling about climate stuff. I've cared about climate change for years now, but I mean, we're making the perfect the enemy of the good and using this stuff for political reasons, which is in some ways even worse.
Yeah, absolutely. There are really good ways to mitigate, CO2, and we just somehow chose to not do any of them and to find some dumb ones.
Yeah. I think sort of last thing before I just open it up for us, because the one other thing I had on my list, I sort of went through one of the last things you sent, and I found myself agreeing with you on most things, like long Brazil, long LATAM, short Egypt, definitely. Egypt's a dumpster fire, short India. But I saw you were also short Turkey, and I wanted to talk about that for a hot minute, because it's up. It's up like 20% on the month. The Istanbul Exchange or whatever it is up a third on the year.
That's why I'm not anymore.
No, you're not anymore.
So
I
actually closed all countries short. So I should have kept Egypt on, but I got rid of all of them. But yeah, go on. Like, it doesn't mean we can't talk about it.
Well, no, just curious what your thought process was on being short Turkey, and then kind of what was it? Just it scared you off, or do you think do you have a fundamentally different outlook on it now? Like, talk to me about your thought process there. I'm curious.
Sure. So I think this would be fun because I've heard you talk about the currency tricks, the charades there. So
all smoke and mirrors, but smoke and mirrors.
I think so. So I think we have a different perspective there. So I think this could be good. But really, the fundamental reason I was short all these countries, and I was short Pakistan for a while, and I should have stayed short Pakistan. It was just people that any country that would be hurt by rising energy and rising dollar. And rising food. So anyone that has to import a lot of food and energy and doesn't have enough dollars laying around, I figure they would get hurt. And we are seeing that. But at the same time, Turkey. So I kind of break the world out in different regions. And in the region that I have Turkey in, which won't make sense to other people, so I won't even say it. But it's just crushing the rest of its competition. Around whether it be Africa or East Med, Middle East, it is just crushing all of them. Their equity market's having a very good year. But going back to the currency thing, another one of the reasons I am bearish, I just don't know how long it takes for it to become a thing, is I do think it's kind of smoke and mirrors. It has like an embedded kind of bomb in it, where what they're essentially saying is, give us your money and we'll guarantee that you won't lose any, and the way that we will guarantee that you won't lose any is we will take it on the fiscal balance sheet. So basically what they're saying is we'll print it. So if you get into a situation where the currency kind of for whatever reason comes, unhinged and starts to really fall, then all of the people that have those deposits go to the government like, cool, you said you'd kind of, plus us up to get us to even here. So give us our money. If they held true to that and you're like, okay, yeah, here's your money, they would have to do that with deficit spending, which they can't afford to do. So they'd have to print it. And that becomes a reinforcing loop to me, where the currency goes down and you print money to make people whole. And then that makes the currency go down. And then you print money to make people whole. So that would have to break through saying just kidding to those depositors at some point, or just having a really fun hyperinflation party.
Yeah, at CI we've been long Turkey since November, since Erdogan really went crazy about the interest rates and fired the central bank governor and things went badly. And I will say that for me the thesis is more about an overreaction. Rather, I'm not saying that Turkey is like rainbows and chocolates and everything. It's just not quite as bad, I think, as everybody else is saying. The first redemptions for that policy you're talking about with the Turkish lira and guaranteeing those foreign currency and other deposits in the Turkish lira, that happened at the beginning of this month. Price tag was around 800 million for the Turkish government. So I'm with you right there. That's going to be a pretty tough bill.
And the currency has barely moved, so that's kind of scary.
Well,
but hey, like to this point, it's worked.
Well, that's the thing, though. So, I mean, that's the first redemption from when they started the policy in January, when there still was movement. So the interesting thing, and in some ways the inexplicable thing to me, is that the currency really hasn't moved. It's been stuck between 14 and 15 on the dollar for almost a full month now, and it's been pretty tame. And I've been trying to explain, because I think you're right about the food and energy problem. But one of the things I think has gone unnoticed is that, Turkey was very brash about the Ukraine conflict at the beginning. They have been anything but since. And they are importing like double the amount of Russian wheat than anybody else. Their energy access with Russia is still good. They're still buying. So in some sense, they've engineered things so that they're just getting maybe cheaper like versions of these Russian supplies going forward. You kind of add into that a weaker lira. It challenges a lot of things, but it does supercharge their exports, and that's the one thing they're really good at. They're the only ones in the region who make things, and they're in a really, really great location. And then I think the other really interesting thing is that foreign investors have basically run away. As far as I can tell, the people, I haven't met anybody else like me, like and us at CI, where we're long Turkish equities. To the extent that I know anybody who's in it, they're short, and the short interest is really high on some of these ETFs. But the thing that's happening on the backside of that is that Turkish domestic investors are buying Turkish stocks, and they're doing that because all their fixed income instruments in Turkey suck because of what the country's doing.
Food inflation 60%, and the policy rate's 14%. Like that's significant. But like you say, but they're going to bid up stocks.
Yeah, so I think that's what's going on. But I can make an equally compelling case, like you said. I mean, they import 70+% of their energy, a lot of their food. There's a lot of smoke and mirrors with this currency stuff. All it takes, they've managed to stabilize market sentiment. But if it went south again, do they really have the money to back it up when the chips are really down on the table? Those are all really scary things, but I don't know, just geopolitically and from a macro perspective, like you said, they're not Egypt. They're not, some of these countries that are around them. And I also think long term, there's an interesting thing happening energy wise, where they realize if you take Russia off the map, like they're the only option, because like Iranian oil and gas and Iraqi and Azerbaijani and stuff in the East Med, like all that stuff kind of has to go through Turkey, and they have found some stuff in the Black Sea too. So I think Turkey's also dreaming of this future where they're actually an energy hub or maybe even an energy exporter.
And there's a lot of gas in those kind of contested areas with them in Greece. So speaking of, Greece is one that just announced they're about to start putting billions of dollars into trying to find some gas off the coast.
Mm-hmm.
So it's a very interesting way of looking at it. And to your point, like some of the best investments are just when something just finally bottoms out as just being so bad and becomes a little bit less bad. On the currency shenanigans, I'll call them, it's a Hail Mary, but I think at the end of the day, it is one that can work. So if he puts the currency to sleep long enough to get kind of the macro backdrop back under control, then he can kind of ease back out of that. So they go, okay, like you don't need it anymore because the currency's fine. So we're taking it away, and maybe you can kind of, do that without having a problem. I think that's obviously very difficult for them to pull off, but it isn't impossible. And I think that's noteworthy.
Well, and he's only got to do it for a year. He's got a presidential election in about a year, and if he can win that election and win it kind of, with his party dominating, like he's set for kind of a long time. And this is the other kind of leading indicator with him. Inflation's over 60% right now in Turkey. It's surging above even their central bank estimates, which I assumed were very aggressive so that people didn't get surprised. There's no riots in the streets. There's no political opposition coming up against Erdogan. His poll numbers have actually gone up in the last couple months. So some part of me thinks that maybe Turks like what he's like. Something in the mix is right. And I'm even as somebody who's long, I'm like struggling to explain exactly what it is, but the market is telling us something. I'm just trying to read the tea leaves.
You look at the equity chart, and it is definitely telling us something. Like that I cannot argue with. I've been basically a Turkey perma bear for years. So, but I understand where you're coming from, and I always wanted to like get to a point where I could get long, because the potential, like you say, I mean, they make and export a lot of stuff, and they're good at it. It's not, you look at something like the drones they export; those things are really good. Like they make a big difference for people, and that's not the only technology that they're really good with. So yeah, to your point, like the potential is really, really there. So if they can just kind of have decent governance, it could really run. So I definitely appreciate the thoughts behind the trade.
Yeah. I know you've got a hard stop, Chase. Anything I didn't ask you, or any parting thoughts pearls of wisdom you want to share with our listeners?
No, like the only thing I can think of is like going back to the inflation thing. I just want to kind of hammer away at it. Like there's going to be a slowdown coming. It's kind of clear that in the U.S. the way to kind of slow things down is to slow down financial conditions, is to tighten them. And the only way they can do that is to engineer problems in the market. And some people kind of refer to this as a Fed call. We're so used to the Fed put, where, hey, if stocks go down, the Fed steps in and makes it all better for you. Well, now I think it's to the point where they have to get incrementally more hawkish until they break the market. They need to break the market. It's kind of their mission at this point, so that they can tighten financial conditions, so they actually have a chance of really getting inflation back under control. Because I think it's starting to scare them a little bit. And hey, rightfully so. Like, you don't want expectations to come unhinged. You don't want wages to come unhinged, because that's a really difficult problem to fix. And if you think the Fed's going to break stuff with this tightening or the tightening in 2018, just imagine how much they would break if they had to catch up to 15% inflation again, like the 70s. So from that perspective, I get what they're doing, but I do think they're basically going to throw everything at this right when it was going to start taking care of itself anyway. So I think we're going to have a significant slowdown, and so I think being over your skis in financial assets, in even commodities, it could be, you could be in for a bad ride. I think most investors have had a really good 2 or 3 years, and I think, if you're 100% in all that, like maybe taking a couple pennies, a couple chips off the table, and taking them to the cage, and walking home, like may not be a terrible idea for the rest of 2022, especially in the second half. And I've been really bullish, for months, years, but I think things have changed a little bit with the way the Fed is going to have to treat the markets.
Well, on that optimistic note, you can find Chase's research at pineconemacro.com. We'll also put all that in the intro. Chase, thanks so much. Good luck to the Cavs, and we'll have you back on soon.
All right, go Cavs. Take care.
Cheers. Thanks for listening to the latest episode of The Perch Pod. If you haven't already, you can find us under the name The Perch Pod on every major streaming platform. Subscribe for downloads, follow us, all that good stuff. If you have feedback on this episode or on any episode, you can email us at info@perchperspectives.com. I can't promise that we'll reply to every single email that comes in, but I read every single one that comes in, and I love hearing from listeners, so please don't be shy. You can find us on social media. Our Twitter handle is @perchspectives, because we love a good pun. We're also on LinkedIn under Perch Perspectives. Most importantly, please check out our website. It's www.perchperspectives.com. Besides being able to find out more information about the company, the services that we provide, and even to read samples of our work, you can also sign up for our twice-a-week newsletter on the most important political developments in the world. It's free. All you have to do is provide your email address. And even if you don't want to do that, you can read the post for free on our blog. Thanks again for listening. Please spread the word about Perch Perspectives and the Perch Pod, and we'll see you out there.